Hey guys, Eric here, Mr. Fired Up Wealth. And if you're like me, you like IPOs, you like the exciting disruptive technology. The problem is that it seems like they keep coming out every week and it's hard to keep up with the IPOs. It's also hard to have enough money laying around to keep buying them. So I've got an ETF today that might help solve some of your problems. I've been seeing it in the group now for weeks. You know, we've covered several IPOs like Lemonade that have come out, like Royalty Pharma. There's upcoming ones like Snowflake, like Palantir, and I have videos on the channel, so check those out and do subscribe. But if you want to be a part of these ETFs and maybe have someone manage that for you, this ETF could be for you. There's actually two different ETFs I'm going to cover today. It also could address the big problem looming. If you want to invest in Ant Financial, I might have a solution for you. Stay tuned. Okay guys, so if you haven't heard of Renaissance Capital, they really are the IPO expert. They've been around for 25 years. They're very credible. So what I'm going to do in this video, I'm going to give you a little, very brief background about Renaissance Capital, and then I'm going to go into the actual ETFs. I'm going to show you how the ETFs works, how they're structured, the expense fees. Then I'm going to show you what's in the ETFs. I'm also going to cover later, I'm going to cover Alibaba's Ant and how you can invest and which of these IPOs will cover it. So stay tuned. I'm also going to give you some more information about Ant Financial that you'll want to hear. So really quick, Renaissance Capital, IPO expert. We make IPO investing easy. Just want to read this one quick paragraph. Institutional pre-IPO research. We help the world's largest and most active institutional investors, investment banks, and IPO advisory firms track, analyze, and gain actionable insights into the global IPO market. Our IPO intelligence research platform is the gold standard for independent pre-IPO research. You can see they work with T. Rowe Price, JP Morgan, BlackRock, all of them. With over 25 years of research and investment expertise, we're dedicated to helping our clients profit from IPOs. That's what they do, guys, and they're good at it. Okay, so Renaissance actually has two different ETFs. There's one that's US listed, focused on US listed companies, and then there's one for international, and I'm going to talk about both. The first one is going to be the US listed. The ticker is actually IPO, so literally the ticker is IPO, that's the ETF. And how it works, the Renaissance IPO ETF enables investors to own a basket of the largest, most liquid US listed, newly public companies in one security, reducing the risk of single stock ownership. The Renaissance IPO ETF accomplishes this by replicating the performance of the Renaissance IPO Index. The nitty gritty. So the Renaissance IPO Index reflects approximately the top 80% of newly public companies based on full market cap. It's weighted by free float capitalization and imposes a 10% cap on the largest institutions. So sizable IPOs are added on a fast entry basis, meaning they try to get them into the ETF as fast as they possibly can. And the rest are added during scheduled quarterly reviews. So every quarter they do a review and they do some rebalancing. Companies are removed 2 years after their initial trade date when they become what they call seasoned equities. So IPO is going to be bought by this ETF fairly quickly, and it's going to be held for basically 2 years from the initial trade date. And so here they actually have the ticker as IPO USA. Earlier it was just IPO. On Fidelity, the ticker is simply IPO. If you can't find it, try IPO USA. You can see the top 5 holdings on the right, but stay tuned because I'm going to go through the entire holdings, and there's quite a few of them, so you'll want to see what's on there. But you can see Zoom Videos on there, Moderna, Datadog. There's some really good companies, Uber. Renaissance US, here's the performance. Now, this is a chart. So the top, the lighter blue line is obviously the Renaissance IPO, and the bottom line, the black line, is the S&P 500. If you look at the performance the last 3 months, it's absolutely crushed it. It's up 53.56% versus 20% on the S&P. Year to date, it's up roughly 31% versus a negative 3% on the S&P. So this isn't performing quite as well as, like, say, a WCLD or maybe even a CLOU, but it is performing obviously very well. The 1 year is 28%, 3 years 18%, 5 year 11.75, and you can see the inception is 15.26. So if you look at basically the inception return of 15%, it's outperforming the S&P only by about 1.25%. So real quick, here's some fun characteristics. Obviously, everybody loves pie charts, right? So let's zoom in on this. And you can see technology is 44.3%. This is the blue chart here. You've got the healthcare at about 21% roughly. This green one is consumer discretionary at 17.1%. It kind of looks like my portfolio breakdown if you did one of these pie charts on mine. Communication services is 6.6%. Consumer staples, 4.7%. Financials is 3%. Materials is 2.5%. And industrials is only 1%. So that's kind of cool. I thought I'd show you that. And then the market cap distribution here. Large cap is going to be 76% weight, and that's going to be over $10 billion companies. And then mid cap, 2 billion to 10 billion, about 24%. And real quick, before we go into the detailed list of the holdings, I want to go into Fidelity. So if you use Fidelity, I typed in IPO in the search, and you can see the Renaissance IPO ETF comes up. There's also the IPOS, and that's going to be their international. And then there's a couple other, like First Trust also has an IPO ETF you can check out. But today we're looking at, right now I'm going to look at IPO. That's the Renaissance IPO ETF. Let's just take a look at Fidelity and see what they have to say here. So it says it has a yield and it's a negative positive. I would completely ignore that. You're not buying this for yield. The expense ratio is really what I wanted to show you. 0.6% expense ratio. You can see the volume. There's not a lot of volume on it really. 48,000 is the 90-day average volume. So this is one of those. It's probably the size of WCLD when I made that video. Will it take off like that? It's hard to say, but when you see some of the holdings, I have a feeling as more and more of these IPOs come out that ETFs like this are going to be more popular because not everybody has unlimited funds to buy every single ETF, and they might want to buy a basket and do it that way. All right, guys, let's get to the good stuff. So what is in the Renaissance IPO ETF? And there's 42 different holdings. You can see Zoom Video is number one at about 10.13% weight. This is holdings as of July 21st, 2020. You've got things like Uber, PDD, Moderna, Datadog, CrowdStrike, Slack. So you can see a lot of these are in, say WCLD. A lot of you guys might own that or the CLOU if you're playing the cloud, cloud-based technology companies. So Zoom and Datadog and CrowdStrike and Slack are in there. But then you got some cool stuff like Moderna and PDD and Neo, Pinterest, Elanco Animal Health, Avantor, Tencent Music Group. So that's interesting, of course, because that's a Chinese company, but it's US listed, and so it's in this ETF. You've got Lyft, you've got Beyond Meat, Peloton, StoneCo, very diverse and some really quality companies. And I own a lot of these, but a lot of them I don't. And things like, for example, Livongo, I probably should have bought that. I missed the boat on it, I feel like, and it just ran too much, so I don't own it. Dynatrace, another great company, Guardant Health, Anaplan, BJ's Wholesale Club, 10X, Farfetch, Elastic, Tradeweb Markets, XP, Cloudflare. There's another WCLD play. You can see Royalty Pharma. I've actually done a video on that. And if you're interested in IPOs, I have a playlist. I'll actually put a playlist up here as a card, and you can take a look at that. But I cover up and coming IPOs like Snowflake, like Palantir. I did Lemonade before the IPO was released. I did Royalty Pharma, and so on. So you can see the Adaptive Biotech, Chewy, Warner Music Group. There's just a ton of them on here. ALK, ALLO. You got the ZI for the Zoom Info Technologies. You got PPD, Reynolds Consumer Products, Solar Winds, One Connect Financial Technology, and then even some Levi Strauss and companies. So that's a pretty small. So you look at the holding percentage. Some of these are tiny, like Levi's is 0.17, Solar Winds 0.28. You can see it scales up. So when you get to like Lyft, it's about 2.39%, and then Zoom all the way up to 10%. So those are holdings. Stay tuned because I'm actually going to go through Alibaba's Ant Group and how you might be able to play that one. Before I do that, though, I'm going to go really quickly and show you the international IPO ETF holdings. Hey, down here. So real quick, I want to go through the Renaissance International IPO. I'm going to go through the holdings here just in a second. What I wanted to show you really quick was the expense ratio on this one's 0.8%. So on the regular IPO, it's 0.6%. On the international, it's 0.8%. That's not uncommon because it costs a little bit more money to buy the international holdings. So it makes sense to me that the expense ratio is slightly higher. So this one, the ticker is IPOS, and this is the Renaissance International IPO ETF. And you can see the listing country, Hong Kong, Japan, Germany, Italy. So all these are non-US listed companies. And some of them, I don't even know what they do. It's interesting seeing like Budweiser Brewing on here, APAC. But you can kind of see some of these. I'm not going to read them all. You can probably see on your screen. If you're interested, go on to renaissancecapital.com and you can find this holdings really easily. There's 40 holdings on here. A lot of them are, Chinese, but there's Chile, there's India, tons of Hong Kong, Brazil, a couple in the UK, Norway. Sweden. So really interesting. If you're trying to do international, this might be a great way to play some international stocks, that have potential for some good growth over the next couple of years. Maybe add a couple % of this ETF into your portfolio. Okay, so some of you have waited this long because you want to know more about Alibaba's Ant. This article on CNBC says Ant could be bigger than some Wall Street banks. What you need to know about the dual IPO. I'll put a link to this article in the description of the video. You can check it out, take a look if you want to go and read it in detail. But Ant Group is an affiliate of Alibaba, and in just this week, it announced plans for a long-awaited dual listing IPO. What was interesting about it is they're only going to list in Shanghai and Hong Kong, and they're not listing in the UK, and they're not listing in the United States. So that's interesting because you're not going to be able to buy shares of this stock just by logging in Fidelity and doing it through a US-based trade. So you might be able to do through some brokers as an international and pay, I think Fidelity is a $50 fee, for the actual commission. But how else could you play this? Well, according to this, and I'm going to go in a little bit more detail on Ant Group, and then I'm going to tell you my thoughts on that. So just stay tuned. So Ant Group runs Alipay, if you're not familiar, one of China's most popular mobile payment apps, but has also been expanding into other products such as wealth management and loans. And I'm going to get to some numbers on that in a second. Ant Group has not priced its shares yet, but listen to this. One analyst said the company could be valued at $200 billion. $200 billion. Wow. So in 2011, Alibaba sold control of Alipay to a group controlled by Jack Ma. Everybody probably knows that story. And here's the thing. This is what I want to get to. Ant Group has over 900 million users in China for Alipay, but offers financial products beyond that, including wealth management, loans to businesses, and insurance. Crazy. IPO details. Ant Group will carry out an initial public offering on the Shanghai Stock Exchange, Starboard, and the Hong Kong Stock Exchange. The Starboard is China's push to create a domestic equivalent of the NASDAQ in the US. So obviously, guys, there's some geopolitical tensions here. It's probably no coincidence that they're not listing in the US. I'm sure there's some pressure, I would imagine, there from the government. I don't know that for sure, but it seems like that's a pretty safe assumption. Ant Group's last major fundraising event was in 2018. Investors, they basically put in $14 billion in the company. At the time, the Wall Street Journal reported the company was valued at $150 billion. This is back in 2018. So in 2 years, is it worth more than $150 billion? Probably, right? Its valuation can now be as high as $210 billion, according to David, a senior analyst at Bernstein, who carried out his own calculation at the end of last year. What does that mean for Alibaba? Alibaba has a 33% equity stake in Ant Group. E-commerce giants Hong Kong listed shares were up 5% on the news. Ant represents $19 of Alibaba's American depository shares. So if you own Alibaba, if you own the ADS, the ADR in the United States, and the ticker is BABA. So if you own that, $19 of that would actually be Ant, which I thought was interesting. Alibaba's US listed shares closed at $254 on Monday. The current price target of the stock is $290, which could hit that by the end of this year or beginning of 2021. And obviously, based on these numbers that we looked at earlier, Ant Financial is probably going to be the largest IPO ever. I mean, if you look at the largest IPOs to date, you have Saudi Aramco with $25.5 billion, Alibaba at $21.8 billion. You had SoftBank at 21.3, Visa at 17.8 billion. We don't know what Ant Group's going to come in, but my guess, based on what we know so far, is it's going to blow these numbers out of the water and be the largest IPO we've ever seen. Okay, so if you're looking to play Ant, the way you would probably do it first is going to be the International Renaissance IPO ETF. That ticker again is IPOS. And the reason for it, if you remember, the other ETF that's just IPO, that's focused on US listed companies. And so I would imagine that it's going to have to only be in this one. The reason that this is probably the best way to play Ant if you're in the US is because IPOS is usually the very first ETF to get the IPOs added into their basket. So they're probably going to buy the Ant IPO faster than most other ones. Now, eventually you're going to see your standard Chinese ETFs like EEM, VWO, IEMG, MCHI. There's a few other ones. those ETFs will eventually probably carry ANT within its holdings, but a couple of things. It'll probably take some time because it has to go through some checks and balances before it can be added. And so that's the biggest one. And number two, the weight is probably not going to be very heavy because a lot of those ETFs have hundreds of holdings, like 200-300 holdings. So when you think of this one, it only has 40 holdings. And you can see there's some pretty low weight at the bottom, 0.33%. And at the top, you've got 11 and 10%. My guess is that ANT is probably going to come in this top 10, top 15 range and be a pretty significant weight. If you're looking to play, if you're in the US or elsewhere and you don't have access to the Shanghai or the Hong Kong stock markets and don't want to pay big fees to get access to those, you could play this through IPOS. And for me at least, it's free trades, free commissions through Fidelity and most major brokerages. All right, guys, that's my take on the Renaissance IPO ETFs. There's the IPO and the IPOS. Both are very good ETFs. I encourage you to take a look at those and see if they fit your portfolio needs. If you haven't subscribed, please go ahead and click the bottom right-hand corner, hit the subscribe button, hit the little bell so you get notifications. If you haven't checked out our Facebook group, please go to Facebook and type in Fired Up Wealth and join us there. Appreciate your time and attention. Have a great rest of your day. Take care.